Yes, good morning, students, and welcome to the class of SAP. We have with us here Nagraj sir. Good morning, Nagraj sir, and a warm welcome to you, sir.
Thank you very much, madam. Good morning.
Yes, sir. You may please start the session, sir.
Sure, ma'am. Yeah. So, dear students, very warm welcome, a very good morning. So, the first class for this week has started, and you all know, as and when you have questions, just put it up in your Q&A section. All right. Now, we were discussing something very interesting as regards the how exactly, what are the different kinds of projects you will come across in SAP, and how is or what exactly, probably if somebody is exposed to a programming language, they would be aware of something called as SDLC, software development life cycle. So similarly, even your SAP does follow certain steps, okay, which sequentially arranged steps which have to happen necessarily in the same order. All right, so that the final implementation is successful. Clear? Now, what happens in a and what are the kinds of, okay, I'll come back to this later. I hope the concept of document splitting was clear, and about the we also discussed the last, even before we wound up the session for the week. We also discussed about the ARA, I mean, more of AR, because we had already had uh, a good coverage of accounts payable. Now we have accounts receivables. So we discussed what is a cycle called as a lead to cash, or maybe in your ECC terms, it was order to cash cycle. And earlier, when we spoke about the accounts payables, it was in ECC, it was called as P2P, procure to pay or purchase to pay or whatever. And in the HANA environment, it is called as source to pay. All right. So lead to cash, source to. So we will definitely discuss these cycles in detail. Maybe probably say by, I think next week, I think we should be ready with the concepts of integration. Very, very interesting, right? Okay, coming along. Just like we had, or rather we categorized our vendors into imports and local, or maybe say based on the geographical location, based on the business volume. The same logic applies to your customers also. Absolutely no difference, right? And just like you had the master data broken up into a couple of views, the customer master data is also broken up into the general view, the sales, the finance view, and the sales organization view. So in the vendor side, we had the general information, the finance related information, and the material management related information, the purchase organization. Here we are talking about the sales organization. Typically your sales related information, sales department related information of the individual customer master data. And the individual vendor or the customer master data, they are also referred to as subledgers in SAP. in HANA as well as in the earlier ECC system also. No, absolutely no change in the nomenclature. No change in the names. Clear? They are called as subledgers. And one more important point, what you need to understand is how the finance module is talking to the individual submodules. No doubt your accounts receivable and your accounts payable, they are the individual submodules under the FI module. So how is the information flowing within the modules? So integration is your basically we speak about the integration with two different modules, but here you also have the integration within the module also. That is within the finance, you have the finance and the AR submodule or the AP submodule talking between themselves. And how do they communicate? They communicate through the reconciliation account. The reconciliation account is nothing but a simple general ledger account created in your operational chart of accounts. Clear? So you are connected. What happens if you do not connect? Suppose you have a question. What happens if the individual customer or the vendor is not connected through the reconciliation account or through the recon account? In SAP, we also call this as a recon account. Okay. What happens? The answer is very simple. No transactions takes place. Absolutely no transaction takes place. Either the finance related transactions or the integration related transactions, both of them will not happen. Why? Because what is the role of the reconciliation account? The role of the reconciliation account is to accumulate the balances of your individual customers and vendors and put it in the sundry debtors or in your sundry creditors figure. This will not be achieved. Yeah. Especially when you're talking about from the integration perspective. When you're talking from the integration angle, this is not at all possible. This will not be possible until and unless you connect the individual customers or the vendors through the reconciliation account. Here, what am I talking? I'm talking the link within the module. I'm not crossing the finance module. I am talking about the integration within the FI module. Okay. Now, we also spoke about the partial and the residual payments. So what was the example? Let me assume that I have made a sale for 1 lakh rupees. I have made a sale for 1 lakh. So the customer is paying me 65,000 rupees for that particular invoice amounting to 1 lakh rupees. I have a payment being made by the customer for 65,000 rupees. Normal business scenario, right? Not special to SAP alone. This normally happens even in the business, whether SAP or non-SAP. Now, how does the system behave when you take care of this transaction either through the partial payment methodology or the partial payment option, And how does the system behave if the user who's recording this payment, or rather who's recording this receipt, is using the residual payment methodology or residual payment option? In case the end user is using the partial payment method to give effect to this transaction, in your SAP system, both these items will be shown. And how will they be reflected? They will be reflected as the open items. Both, but the balances would have changed based on whether it is a. So what does it do? Customer, it shows a debit. It shows a plus balance. Just a moment. In your SAP, this will show a. This will show the. Your SAP system reflects both these items. Customer account debit to sales, that is the entry. Why it is showing 1 lakh is showing a plus. Okay. And 65,000 rupees is the receipt. I've written it down in the left, amount receipt. Now, when the user uses the other way of affecting this transaction, there are two ways of making the SAP system or recording this transaction in the SAP system. One is your partial payment option. The other one is a residual payment option. Clear? Now, what happens if this transactions of the installment payment gets into the residual mode? Both these items will not appear, but the balance of only the open item, sorry, only the balance of 35,000 as an open item will be shown in the system. The system won't keep the track of both these. Clear? When you follow the residual methodology of receiving this payment, part payment. Clear? Typical life scenario. Clear? Now, so you always have, I mean, see, so we spoke about balance confirmations. This also is very much available in the customer side. So we saw the balance confirmations from the vendor side. Same concept is available even in the receivable side. Another interesting feature, just like the accounts payable had an interesting feature by the way of automatic payment program, your customers or your accounts receivable, they also have a very, very interesting concept called as dunning. Dunning. So we have a process, an automatic, just like we had the automated process of releasing payments to the vendors. Here we have the automated concept of reminding the customers for their outstanding payments, outstanding receipts. So we are reminding through the dunning process, we are reminding the customers that they are owing us this amount. And the whole process is being automated by the finance consultant. It is configured in the system by the finance consultant only. Nobody else will be responsible for these two processes. What are the two processes? Your automatic payment program with regards to your payables, your dunning procedure or your dunning process relating to your customers. So what does the dunning procedure, what should it involve? So the first and the most important thing, it should consider the invoices which are overdue, the sales invoices overdue, they are crossing the payment time or the receipt time. And suppose I have given the customer a grace period of say 2 to 3 days. That also must be considered. The system should also consider the grace period allowed to a specific customer within which even after the overdue, the time is actually over. Okay, and the invoice is already due. But again, since I'm a little lenient, I give it say 3 to 5 days time grace period for the customer to make the payment. So the system should consider that. Just like in your automatic payment program, what did the system consider? The system considered the discount and also the credit time. What you and your vendor have come into a understand. So similarly, in your AR process, in your dunning process, the same thing should be considered. So what is the credit time that you have given your customers? And also to block the dunning procedure itself. Why block? So now what is the process? You are setting up an automated process to remind the customers for their overdue receipts. Perfect. Now, do you constantly keep reminding your customers? If at all you're dealing with a very, very important customer of yours, he will be very irritated to get constant reminders. He doesn't like to be reminded that he needs to make the payment. So for such customers, I can block the procedure from happening. I may not allow the dunning process to happen at all. So this also is very much possible in your SAP system. Just like we block the payments to the vendors, in this case, you are blocking the reminders to reach the customer. The system will not even pick up these customers for reminding them. And we also read in the statement, or rather in the study content, that SAP allows you a maximum of 9 levels of dunning. What is 9 levels of dunning? SAP allows you a maximum of 9 reminders to go to the customers. But just imagine a scenario where you're reminded 9 to 10 times, n number of times for something. Won't you get irritated? Same things happen to the customer also, right? So normally in the live, we have not seen maximum of 2 to 3 levels only. Maximum is 3. We have not seen more than 3. Even in our practical implementations, we have not seen the dunning level reach greater than 3. We have not reminded the customers more than thrice. Why? This process, you may be surprised that this process is considered so very serious, especially when you're talking about the European projects. When the dunning level reaches the 3rd level, immediately the organization which is expecting money from the customer puts up a case in the court. Immediately it goes to the court. Just imagine the seriousness. The matter, if I remind the customer more than twice or even thrice, the matter immediately reaches the court. and they will have to settle in the court itself. Such is the seriousness of the third level of dunning. And we have seen this. We have practically experienced this in our European projects. Clear? So normally, practically, we have the dunning system being designed by the consultant not to have more than 3 levels. Clear? Another important concept, what we understood or what we touched upon in the first half of Friday was process of down payments, process of advances. Okay. So what is down payment? What is the concept of advances? Now, you are interacting with your vendor and your customer. You are buying raw materials and you are selling the items. So you are interacting with your customer and you are paying to your vendors and you're receiving money from your customers, credit memos. All these things are your normal transactions. But when you're talking about, say, concepts like your rental security deposit, your advances, your bank guarantees, all these transactions, they are treated in the SAP system by the means of this. These transactions are referred to as your special general ledger transaction. Now, how does SAP understand the difference between a normal transaction and your special general ledger transaction? So for the SAP system to understand, okay, you in the sense the consultant needs to create a new reconciliation account for the special general ledger transactions. There could be any number. All right. Now, what is a process? So it becomes the responsibility of the finance consultant to generate or to create a new reconciliation account in the SAP system, similar to your normal reconciliation account. You're able to understand? So on the similar lines, the FI consultant or the finance consultant creates a new reconciliation account for the system to accept the special general ledger transactions. So let us take advances received or advances made, how it is being treated by the SAP system. First and the foremost thing is this transaction, it is called as a noted item. It has 3 steps. First of all, just like you're requesting for the advances, you have this being created in the SAP system as a noted item. So what does this indicate? This noted item is just as a informatory lines in your financial statements. Just like when you see the typical balance sheet, at the end of the balance sheet, you will have some points. All these are noted items. All right, they do not have the financial impact. It is just an information. You got my point? So such things, they are referred to as noted item in SAP. Now what happens in the second step? The actual transaction. What do you mean by actual transaction? The advances received, or I make the advances. I pay, I receive money by means of advances. The actual transaction takes place in the second step, the down payment steps. Second step in the process. Now, how is the advance cleared? How does the system understand as to when I should clear the advance? The poor system should know, right? Because it cannot keep having these advances forever. At one time or the other, the advances need to be settled. So how do I settle the advances? Either paid or received. So what do? Suppose I receive money as advance from the customer. How do I settle this advance? I sell the product. I make a sale transaction in the SAP system, and I connect these 2 points, the down payment and the settlement. I'm connecting the sales invoices to the advance transaction. The transaction which I recorded that I have received the advance, that transaction, I am connecting it to the invoice which I'm generating once I sell a item, and I connect this to the advance. Whatever I receive from the customer, I make the system understand that it is for this particular sale transaction that I am connecting this advance. So this was about the concept of the down payment. After which we touched upon a very generic subject in the second half of our discussion. In the last hour or so, we had a what is the life cycle of an SAP project? Okay. Now, how does it start? Now, what are the different categories of projects? What are the different kinds of projects? We have the implementation projects, which we start bringing in SAP from the scratch. We have upgrade projects, where the version of SAP has changed and we need to move to the higher versions. So we had, I gave you an example when we spoke about the architecture, from R1 architecture to R2 architecture, from R2 architecture to R3, and from R3 architecture to SAP HANA. Now we are talking about HANA. Yeah. So this is your typical example for your upgrade projects. The rollout projects. What do you mean by rollout? Change in the concepts. For example, we had the VAT system of taxation. We moved to the what system? GST. Yeah. So this movement, this typical movement, so has the whole module changed? The whole finance module, has it changed? No. It is only the taxation side of the finance module which has changed or which has transformed. This is the typical example for your rollout projects. Okay. Now we have the support projects. What do we mean by support? The SAP software has been implemented in my implementing partners company, and they have started using in the sense the employees of the implementing company, they have started using the SAP system, and during the course of the usage, while they were using SAP, they had some errors. So who's going to rectify these errors? After implementing, I simply cannot walk off saying that my job is over. No, it can't happen like that. Invariably, you need to have a dedicated team as a support team, as we call in SAP, to help the end users or the employees of the implementing company to resolve their day-to-day issues. Suppose I'm an end user, I'm entering a purchase or a sale invoice. I get stuck. I'm not able to move forward because there is an error. There is an error in the SAP system. So I do not know how to resolve. I'm just an end user. So on whom should I rely? Whom should I get back to resolve this error? I need to definitely have a support team to which I can get back to. Now, typically your exam. Now, suppose if you have any issues as regards any, say, let's say any access or something, you write a mail to the support team, right? Same thing happens to your SAP project also. The end users raise the issues, and these issues, they are called as errors or issues or tickets. They can be called by any name. Okay? Normally we use the term tickets. Right now, let me come back to this a little later. Let me just refresh your memory for as far as the now, whenever we talk about the SAP implementation projects, the life cycle starts, or the first step for you to enter into an implementation project in SAP is your requirement gathering phase. Your your initial preparation or your requirement gathering phase. What exactly happens in this step? This is basically a very high level discussion where both the companies, the implementing company and the company which wants SAP to be implemented, the implementing partner, both of them they discuss. They enter into a discussion, the top level management, as to what exactly is required by the company, what SAP can actually deliver. Okay, how can SAP improvise my profitability or my productivity? What is that extra what I can achieve by having SAP in my company? So like this, so many points are discussed. So basically, as an implementing team, the team which implements SAP, I study how the business is currently working. What are the steps? What are the procedures it is following? What is the business processes that it is following? And even before this, all the feasibility study is also carried in this discussion is carried out in this particular phase. Meaning, does this business really want SAP? Meaning, I match my turnover. If I'm investing more on SAP than my turnover, is my business investment wise enough? Do I really want SAP at that moment? And what is my return on investment? In how many years am I going to get back my investment on SAP? How quickly can I get it? So these are the discussions, these are the points which have to be considered by the implementing company. Okay, so I, as a company which is going to implement, I study the business. Okay, and I know what is being conducted and how things are happening in my new organization. And I, as an SAP expert and as a business analyst, I, in the sense, not a junior consultant, but senior team lead or maybe a senior consultant, the team leads, project managers, they are involved in this discussion or maybe even higher. So the SAP expert team then, after having analyzed the business as it is, now will advise the implementing partner about SAP, what it can achieve, how SAP can do better, in what areas do you suggest improvements, how can SAP deliver these improvements. Correct? This is what is expected by the implementing partner, right? Now, in some cases, SAP may not be able to deliver the solutions, okay, in the way as is required by the implementing partner. So what must it do? It must alternatively find a solution, right? I, as an implementing company, should identify a solution, right, for this particular issue. This analysis is called as a gap analysis. That is, what SAP can deliver and what is expected by the implementing partner if there is a gap. This is referred to as the gap analysis. And how do I narrow this gap? Where are the gaps? And I, as an SAP expert, how would I address these gaps? How would I resolve these gaps? Is the solution what I provide to the implementing part. Now, the first step of the SAP project has happened. So both the companies are happy and they have decided that they have to go ahead with the SAP project. Now, as a second step, what is the second deliverable? Now, a document is prepared in the second phase of the project discussion. There is a Bible, which is called, this is also called as a Bible of the project. This is called as a business blueprint. Now, what exactly is this document? This business blueprint is one of the most confidential reports as far as the SAP implementation is considered. Right now, what does this contain? It is actually a huge documentation which contains step-by-step discussion as regards to implementation. The step-by-step discussion in step number 1, the detailed discussion which has happened between the top level managements. Okay, they are documented. The points are actually written down. And the most critical thing is both the parties, they sign on each and every document in your blueprint. Yes, both the companies sign on each and every page of this particular document. Why does this happen? It happens because later, after we deliver the SAP product, they should not come back to us saying that, no, this is what we asked for and this is what you have delivered. There is something seriously wrong. And we should not say that this is what you asked us and this is what we have delivered. So in order to avoid all these discrepancies at a later point in time, we always fall back on the business blueprint for us to stay in line with the requirements and stay in line with what the implementing company can deliver. So both the companies, they are aware and they know what has to be expected. Clear? Now, the third step. Now, this is the action step in the sense, the final preparation phase. This is the phase where the size of the team, the size of individual module team strength. Suppose I decide, or rather it is decided that, see, as I said, SAP means not the implementation of the whole of SAP. That is highly impossible. That may not be possible at all. Right? So as a company which implements SAP, I understand the requirement of the company. And I suggest that maybe a few modules can be implemented as of now. Like say, finance module, the sales module, and the HR module. So let me assume that I'm not in the manufacturing side. Okay, I'm not in my implementing partner is not into manufacturing anything. He is into some service industry. So I need to implement SAP. Clear? Now, what modules do I implement? What should be the size of the team? What should be the hierarchy of the team? Should I have one project manager? Should I have one team lead? Should I have how many consultants should I have? Clear? How do I set the budget? What is the budget? Clear? All these things, they are discussed and the team is finalized. So once when the team is finalized, what do? I start converting all the requirements in your business blueprint into SAP. So whatever was there in the business blueprint, which had to be delivered, okay, I work on the SAP system now to deliver the individual requirements. This is your final preparation phase. So all the requirements get converted into SAP. Whatever the implementing company required, they get converted into SAP. Now, what is the most critical activity in this particular phase? This can actually be considered as another phase of the project, but I'm putting it in the final preparation phase itself. What do I mean by cutting over activities? Meaning, my implementing partner was using another non-SAP system. Okay. And now he wants to get into the SAP system. Maybe say, I also put a date, I guess. Maybe say on the 15th of January 2026. So I have assumed that I will be taking this much of time to deliver SAP. Okay. So by the 15th of January 2026, I would be in a position to deliver the SAP product to the implementing company. All right. Now, once when this date is being fixed, under no circumstances this is going to be revised. The implementing team works day in and day out to meet this deadline. Okay. Now, in this phase, what happens? As I said, the first and the foremost activity is after. See here, the consultants, they are working on the SAP implementation also. And at the same time, they are also responsible for moving the non-SAP data to the SAP system. Understood? So whatever the system was used earlier to SAP, there is some data till the 14th of January 2026. Now, by the 14th, I should have compared the statements as delivered by the non-SAP system, and I compared that statement with the statement delivered by SAP. I compared both those reports. And are they tallying? Are they talking the same figures? Is my trial balance, which I drew from the non-SAP system as on that particular day, is it matching with the trial balance or the balance sheet or the profit and loss account? Is it matching with the same reports in SAP? Even before I hand over the system, I ensure that both the reports, they are the same. They are having the same figures. You're able to understand? Now, not only this, I also am given the responsibility as a senior consultant or as a consultant working in the project. I'll also be given, along with the system deliverable or the activities in SAP, what I'm responsible for. I need to train the employees of that particular organization also. Because how will, once I finish my job, I cannot simply walk off. You agree with me? So I would have to train the employees of the department for which I am responsible, for which I create a lot of documents, testing manuals, user manuals, training manuals. Clear? So all these documents, generation of these documents are also the responsibility of the consultants. I sit with the end user and show him how he needs to practically work on the SAP system once they go live. So even before the 15th of January 2026, I should have completed all these activities. And for each activity, there is going to be a strict deadline. Clear? And these deadlines have to be met under whatever circumstances I may be facing. It's actually a very, very serious role, this implementation projects. All right. Now, after we hand over the system to the implementing partner, what is expected? The support. And we know why the support has to be done. Why exactly the support function needs to happen, we all know. How does this happen? So we actually, the implementing company identifies a set of consultants who can take up the role of the support consultants. So after identifying them, we tell them all about the system, how the system was configured. Yeah, so that they understand the whole of the SAP system. And this is called as your knowledge transfer, KT. So we as consultants, senior consultants, we deliver whatever we have done in the SAP system to our support consultants. Yeah, this activity is called as knowledge transfer. Now, after implementing SAP, probably the users, they will start getting some errors due to something. While carrying out their regular day-to-day activities, the users, the employees may encounter some errors, may encounter some issues. We call these issues or errors as tickets. And while we discussed about the project also, we also discussed about these issues, how we structure this particular support team. How do we support this? How do we cater to the support role for the implementing partner? That is also one of the critical discussions, right? So after implementing, how do we support you? How is the after service? After sales, right? We have seen after sales service, something very similar. Whenever you buy a product, like say a water filter or whatever it is, you'll be getting some free services or something like that. You have to, so within 6 months, you have one service or something. So same thing, right? So you enter into this agreements and the timelines, depending on the criticality of the issue. Is it high priority ticket? Is it a medium priority ticket? Or is it a low priority ticket? Right? So what does this priority indicate? Priority indicates the time by which the error has to be resolved. Meaning to say that the issue raised was very, very critical to the business. And that is why, that is the reason as to why this has to be resolved in a matter of a few hours. Maybe say 3 to 4 hours. Right? Especially when you're talking about payment to vendors. So what are these critical errors? Errors which can stop your business. We had one typical issue where the payment did not reach a vendor and the whole business came to a standstill. Okay, so nothing absolutely worked. And the medium priority, the issue which is raised as a medium priority, it can take maybe say 2 to 5 days. 2 to 5 days time it can take. Maybe 1 working week you can take to resolve this issue for 1 working week, Monday to Friday. So you raise a ticket, you raise a medium priority ticket on Monday. Okay, you can resolve that by Friday. The same week by Friday, the user is okay, even if you resolve the issue by Friday. 5 working days. If the issue is raised on the last day of the week. So Monday, Tuesday, Wednesday, Thursday. By Thursday next week, you can deliver the solution. So there is an agreement as to how these issues, once they have got raised in the system, and how does the implementing team know about these issues? Say, suppose my implementing partner is in the US. I am sitting in India and taking care of the support. How do I know sitting in India and he is getting an error in the US? How do I know that he has got an error in the US? He raises a information or he raises a ticket. All right, he raises a ticket, and where in the corresponding support tool, there are certain softwares used as support tools. Probably one very common thing is, just a moment. If somebody had heard about what is Solution Manager. Solution Manager is one of the most commonest of the supporting tools, what we have used. Okay, but there could be as simple as a mail also. Just by raising a simple mail, you can raise an issue. Clear? So this is what we discussed on Friday. Clear? Let me see if I have any questions. If I see any questions, let me just check. Oh, all attendance. Okay. Somebody needs to. Okay. I don't see any major questions out here, except for the attendance. So I hope now, even when, so the clock for the solution starts ticking from the moment the issue is raised. So there could also be an agreement that once the employee raises the issue in the ticketing tool, the concerned team, it has to keep the user informed within 15 minutes to half an hour's time after the issue has been raised. He needs to just have a feeling that, okay, my issue has been looked at. Even a slightest delay here also can lead to penalty. Yes, it definitely leads to penalty. And from the moment the ticket is raised till the moment the ticket is solved, you have the time clock set within the ticketing tool, so that it measures the life cycle of that particular issue. So how long has the issue taken to get resolved from the moment the issue was raised till the moment it was resolved. Clear? Janvi madam, can we take a break?
Yes, sure, sir.
Yeah.
So now it's 12 p.m. We'll take a short break of 10 minutes and we'll be back by 12:10.
Sure, madam.
Students, just take a short break of 10 minutes and be back by 12:10. Thank you.
Thank you.